Well, good afternoon, everybody. Welcome to Retirement Trades. It's been a little bit. I decided I'm not going to film if I'm not going to make any trades. There's not going to be anything to see because that's just wasting your time as well as mine. And I've been pretty busy here. It's spring, a lot of things heating up, moving. So we're gonna got other things I need to do too. And this account is kind of on autopilot for a bit, but you can see we are making gains. We're down to only losing $4,000. So that's a big win, if you ask me anyway. But all right, so let's see here what's going on. Let's see. Yesterday, market gapped up pretty good, then pulled back some, made a pretty good run, then pulled back some. And today, again, you can see, we finished here yesterday. We got a good gap up overnight, and we're still pushing towards session highs. I actually had a decent trading session with my one of my larger accounts today. I'm doing some zero DTE SPX trades in there, and I actually pulled off 6 trades, only one loser for $10. I think a total gain of $630 for the day profit over there. So that was a good morning. That was a nice treat. So anyways, back to the small account deal here. Let's see where we're at. I think last time we were here, I had placed a trade. I can't remember what it was. It did go through, so that not a big deal. We were just waiting for our price on that, and I got a notification shortly after I stopped recording. I guess I forgot I had that trade going when I closed out the video because there wasn't a whole lot going on. But anyways, here we are. You can see we're making some gains, up $300 today on these sad positions we're holding, and I should say kind of stuck holding the bag with. But what do we need to do today? Okay, so we got 100 shares of Carnival Cruise Line here that we paid $2,500 for. So we are almost $600 behind on that. And we've got this covered call we placed against it for $20, but they're up at 1933 now. So let's look at the chart on that quickly. So this is the Carnival chart here. Let me zoom out. Okay, so this is for full year. Let me close this window. So basically, definitely up for the year. Had a huge run here, but pulled back. But realistically, we are right in where I would say would be the expected range. If you just kind of want to draw a line across the screen here and an upward slope, realistically, I expect this to be in the $20 to $22 range right now. Just given the ups and downs, the ebbs, the tides, and all of that, just long, slow progression. It's decent stock. So, but we're getting close to that call, and I do not want to get the shares called away at $20 when I own them for $25. So, what are we gonna do? We can roll it out, but rolling it out isn't going to help a whole lot because I'm pretty sure it's going to go up to up around probably around $22 or so. And either way, we're going to lose out on the gains, and all we're going to collect is really small premiums. So what we may have to do actually is just sell this one for a loss. Now, given we've collected 23, but it's going to cost us 40 to get out of it. So that's going to be a $17 loss, but that's way better than losing the stock, which we know is going to progress. Or I shouldn't say no, but we strongly feel that is going to progress. So let's just close that out, get down to the mid price of 40 cents, send that off, and hopefully we can get filled on that here shortly. What else do we have here? SOXL, we've got this $14 put. It's 105 days out, 3 months out. We're back to 13.13. So let's look at the chart on SOX. Finally, hopefully, we've reached at least a short-term bottom and can bounce up here. We got to get back above 26, I think, is our higher strike there. Yeah, we get a $26 strike and a $14 strike put. The 14, I don't think is going to be a problem. Realistically, we should be up in the, hopefully get it back up above $14, $15 range here, and then be able to kind of sell this off and move on. And then we'll be stuck with trying to chase down this $26 one for a little bit. or at least get it to a manageable loss. So anyways, yeah, that's that. How's AMD doing? Let's see where we're at here. We still have this September put, or excuse me, leap that we had purchased at $105. They're up to $99. I am fairly confident that AMD is going to be above that $125 price here before January. I want to say, well, let's see, we got 105. We've collected a total of $2,400. Hey, we got filled on our Carnival, so let's update our sheet here. Carnival call. I was going to say we're going to close that position today for negative 0.4, so we lost $40 on that. So overall, for our options trading on Carnival, we were actually up $124, which helps offset that the loss here so far on the shares that we own. So anyway, so you can add this 124 to whatever the Carnival price is right now. Let's look at that again. Carnival's. So you add 24 to that, you got 58, so you got 2058. Yeah, we're down $442 on Carnival so far, but I'm not concerned about that. That will come back and turn in our favor. What we may want to do is consider, we have just a tiny bit of buying power up here again, especially seeing how we just sold. All right, let's see. Oh no, it's a covered call. So let's look at Carnival positions, trade. Let's see. Oh, earnings. Okay. Let's do before earnings. What is that? That is 49 days out. Maybe go back. Nah, it's a weekly. Well, we'll compare them. Okay, so let's do this. Let's be a little conservative on our deltas. Call sides over here. We want to sell a call, and where's the delta column here? So, geesh, delta's 20 delta. Basically, we can collect 40 cents, but that's $22. That's 42 days out. We could collect about $40. Go down to like a 16 delta to be conservative, 22.50. Realistically, $23 is a safe zone. We can get 11 cents there. That's not exciting. Let's go to the week before earnings, $23. We could probably get 21 cents there for adding a week. And what if we were to consider after earnings? That would be a gamble. That's not a great idea, but that's 52 cents there. So let's see, what would we get here? We just talked about being down about $450 on our trade. This would be $50 more towards that, so that'd be down $400. If we went to $23 from where we are above the $20 we own them at, basically, so we'd be getting $350 of the $450. So if we did this and we had the shares called away, we would only be, well, no, because we're 19 now, so that would be a bigger gain. So between 19, we would be about even, really, if our shares got called away here, if we sold this call. But that is after earnings. That might be leaving some money on the table, but it wouldn't hurt us because what do we got here? 23. Let's do the math here real quick. Okay, so 23 minus, call it 19.3, just for giggles, 3.7 plus, we could probably get what we say, 0.52. Oops, what did you do, Mark? 23 minus 19.3 plus 0.52 is 422. So realistically, if we took this trade where we collected 52 cents here, actually, yeah, we collect this 52 cents and a $23 covered call option. Worst case scenario, we collect it, we're going to make 422 on top of the, what we just calculated at 1930, would be a 23.50. So basically, we would still be about $1.50 short. But is that worth the trade? Let's see. What is the expected move? $3. So 307, so 22.40. We're just outside that expected move. As you can see here, we're just outside the red bar. We're not quite one standard deviation, but okay, let's do the math one more time the other way. Okay, we'll stick with that. Let's go to the $24 price. 24 minus 19.3 is 4.7 gain plus the 0.35. Why did I do that math again? 24 minus 19.3 plus, I want to say 0.35 we would collect there. All right, Mark, what are you doing wrong here? $24 minus 19.3, $4.70 gain. Okay, so we go plus 0.35 is 505. Add that to the 19.3. So realistically, if we did the more conservative approach, we took the 35-cent covered call at $24. The most we could lose if we got the shares called away would be $65 total outage. And because we have gains on our other prior option sales, we would actually still be ahead on Carnival. So that is the more logical solution. Let's do that then. 35, send and get that. Oh, that was filled. Okay, so we have a new covered call for July 18th. Okay, so today we sold a call for July 18th with a $24 strike, and it's quantity one contract, and what do we collect on that? 0.35. So there we go, and this is now an open position. So like I said, we would lose $65 on the shares, but we would still be up basically $60, $59 on Carnival overall. So that is not a bad idea. And if we can stay under that $24 price by the end of July 18th, then we will be good. So let's just see, where's that $24 price? Yeah, look at that. That's way up here. I mean, that's a relative. We got to get kind of back up in this upper channel again here. And when we first started trading Carnival, we drew these. I drew this channel here. So I don't expect it to go too far above this. But either way, I think that's a fair trade because we should not lose on that at all. But I don't think we'll even lose on that options trade. So let's see, go back to positions, anything else that's enticing, let's call it. Let's see, this covered call for June is, well, we want AMD to stay below 125, and considering AMD is at 99, I don't think that's a huge problem there. If it goes up near there, we will, or even if it goes above 115, we'll probably be able to close out these positions and be free of AMD. And if that can happen before June, that'd be fantastic. But I think that's it, guys. That's it for today. I just had to do a couple little trades. I wanted to make sure I record everything that I do in this account for you guys. So like, share, subscribe. There's not going to be a ton of videos currently because my hands are kind of tied here. I cannot do a whole lot until we get some of this recovery. So it's just going to be a waiting game. I will keep you guys informed, and you guys have a great weekend.